One of the main reasons why Coinbase is challenging the SEC is because of a lawsuit that the agency filed against the company in September. The SEC accused Coinbase of trading unregistered securities, such as Solana, Cardano, and Polygon, on its platform. These are some of the most popular cryptocurrencies in the market, with billions of dollars in market capitalization. But according to the SEC, they are also securities that need to comply with federal laws and regulations. What does it mean to be a security? A security is a type of investment that represents a stake in an entity or a project. Securities are subject to strict rules that aim to protect investors from fraud and manipulation. For example, securities issuers have to register with the SEC and disclose information about their financial situation, risks, and plans. Securities traders have to follow certain rules as well, such as reporting their transactions and avoiding insider trading. The SEC has a broad definition of what constitutes a security. It uses a test called the Howey test, which was established by a Supreme Court case. In the Howey test says that an asset is a security if it involves an investment of money in a common enterprise with an expectation of profit from the efforts of others. The SEC applies this test to cryptocurrencies and claims that many of them are securities because they are sold to investors who expect to profit from the work of the developers and promoters. However, Coinbase and many other crypto enthusiasts disagree with the SEC's approach. They argue that cryptocurrencies are not securities, but rather digital assets that have their own intrinsic value and utility. They say that cryptocurrencies are decentralized and governed by code, not by human intermediaries. They also say that cryptocurrencies are transparent and accessible to anyone, unlike traditional securities that are often restricted to accredited investors. Coinbase claims that it has tried to cooperate with the SEC and seek guidance on how to comply with the securities laws. But it says that the SEC has been vague and hostile, refusing to provide clear answers or rules. Coinbase also says that the SEC has threatened to sue it if it launches a new product called Lend, which would allow users to earn interest on their crypto holdings. Coinbase says that Lend is not a security, but a service that is similar to what other platforms already offer. Coinbase believes that the SEC is overstepping its authority and stifling innovation in the crypto space. It says that the SEC is applying outdated laws and regulations to a new and dynamic industry that needs more clarity and flexibility. Coinbase wants to challenge the SEC in court and seek a judicial declaration that its products are not securities. It also wants to rally public support and pressure Congress to pass new legislation that would create a more favorable regulatory framework for crypto. What does this mean for Coinbase shareholders? Well, it could mean several things. On one hand, it could mean more legal costs and risks for Coinbase, as it faces a powerful and unpredictable adversary. It could also mean more uncertainty and volatility for its stock price, as investors react to every news and development in the case. On the other hand, it could also mean more opportunities and rewards for Coinbase, if it manages to win the case or reach a favorable settlement with the SEC. It could also mean more growth and innovation for the crypto industry as a whole, if Coinbase succeeds in creating more clarity and certainty for other crypto businesses and users. The lawsuit could have implications for Coinbase shareholders, as well as the broader crypto industry, depending on the outcome and the precedent it sets. The SEC accuses Coinbase of operating as an unregistered securities exchange, broker, and clearing agency. It also charges Coinbase for offering an unregistered staking-as-a-service program. The SEC claims that Coinbase has violated the securities laws and deprived investors of significant protections. Coinbase denies the allegations and says it has tried to comply with the SEC's rules. Coinbase also says it is proud to represent the industry in court and get some clarity around crypto regulations. Coinbase argues that the SEC is harming America by taking a regulation by enforcement approach. If the SEC wins the lawsuit, Coinbase could face fines, penalties, injunctions, and disgorgement of profits. It could also be forced to delist some crypto tokens that are deemed to be securities by the SEC. This could hurt Coinbase revenue, reputation, and market share. It could also trigger more lawsuits from customers and investors who have suffered losses due to Coinbase's actions. If Coinbase wins the lawsuit, it could boost its credibility and legitimacy as a leading crypto platform. It could also set a positive precedent for other crypto companies that are facing similar regulatory challenges. It could also encourage more innovation and adoption of crypto assets in the US and globally. The lawsuit is likely to take a long time to resolve, as both parties have strong incentives to fight for their positions. The outcome could have a significant impact on the future of crypto regulation and innovation in the US.